Hey guys, this is Market Update. In this video, I'm going to talk about the policy changes coming over the next 6 months, both from the central bank in the States and the government in the States. The fiscal and monetary side, both are going to become way more dovish over the next 6 months, in my opinion. And that's going to give us that push over 100K up to the crescendo for this cycle. I still believe that's coming, and that's because all the data is showing that the response has to come at some point. Stick through the volatility throughout these next few months, because they're going to let the data come through. You can see it's coming soft, and that means the policy response has to come, and that pushes us higher, in my opinion. Before we get started, discount to the crypto course this month. Enter BTC at checkout, you can get 20% discount. I'll also be updating the course over the next few days as well. So I'm just going to upload those, all my latest research. That comes for free if you're an existing user, so check that out by the link below. BTC recovered to 94,000. Maybe a little pause here before we see some of the other economic data coming out. Data is soft, and so I don't know if the market is going to look through that and just say the data's soft, we know what's coming, the policy response, which I'll talk about, or whether the Fed is going to keep saying, no, we're going to leave it a little bit longer, the market gets scared. All of that could happen. I don't know what's going to happen short term, but 6 months time, I know that if this data comes out soft, which it is coming soft, I know what the policy response is going to be. They're actually telling us that. I'll show you in this video. So I'm a buyer, and I think we go well over 100K in this cycle, so I'm a buyer right here. If you trade Bitcoin as well, you can trade on Bybit. Get a $30,000 deposit bonus via the link below in the description. Economic data is starting to come really soft and tracking to be softer than the Fed's own targets. We all know that we, in our debt-based system, require price inflation. That is required, otherwise all the debt goes insolvent. You have debt here and you have the price level here. If the price level drops, the debt gets even worse, right? No one with debt, which is everyone, including the government up to the gills with it, over 100% to GDP, we can't have price disinflation or deflation, right? So what happens when the data comes soft? They become more dovish. So that's what I'm looking for. So the central bank side is important, and the fiscal side as well. They're trying to become more dovish after the tariffs, which are very hawkish. They slow down the economy, you're going to slow down economic activity. That's going to come out in the data. Now, that's the volatility that I don't know what's going to happen, but I'm just going to sit through it because I know what the policy response on the other side is. They've actually told us right here. But anyway, inflation, month over month, coming flat, nothing. Now, if you annualize, let's say core inflation at 0.08, analyze that, let's say it's about 1% a year. It's a full percent under their target at 2%. This is soft data, very, very soft. Maybe the Fed are just waiting for a little spike up in the unemployment rate. And if they get that, they'll be cutting interest rates very fast. 6 months. Think about this. Much more dovish policy coming out of the central bank, and much more dovish policy coming out of the fiscal side as well. Now, dovish means, look, these guys have tariffed everyone and taxed everyone. That's slowed down economic activity. However, on the other side, what they're saying is, this is going to be a substantial agreement that is very big and pro-growth. Now, we know what pro-growth means, don't we? It means that it's essentially putting stimulus into the economy to drive up the price of everything and inflation and GDP, because you can control those things via how much fiscal stimulus you pump into the economy. So they've taken it out through tariffs, and they're giving it all back through these tax cuts. And that means they're going to continue running deficits, which means you have to be in assets like BTC. In that same post by Scott Bessent as well, we actually have a time horizon. Tax bill done by 4th of July. Very big pro-growth, right? Fiscal stimulus, right? Tax hikes through tariffs, very, very restrictive, not good. That's going to cause disinflation, potentially joblessness, unemployment rising a little bit. And they're just saying, don't worry, we're going to cut taxes on the other side. We're not going to drag the fiscal side. We're still going to run deficits. We're still going to stimulate markets. That's what they're saying by 4th of July. So we have a catalyst and a time horizon. Now we have a tradable event, finally, after a few months with basically nothing. That's why maybe we're seeing a positive candle this month. People are looking through and saying, we know what's going to happen. So we're actually going to position now, right? So I think we just can go way higher in this cycle if you're getting more dovishness on the fiscal side, and the monetary side can come way, way softer. Now, the danger and the uncertainty is a lot of the economic data is not good, right? Like, it's really soft. And if the Fed keep their head in the sand here, we could see a shock or FUD storm first before they actually react. And that means volatility always to the downside, right? So you have to be aware of that can come when you're buying up here at 94. I think eventually we go much higher this cycle, but you can get these huge dumps before the Fed reacts. I don't know if we've had that kind of stock market 20% drawdown that we had over the last couple of months, whether that was it or if we go much worse. But you can see a lot of the forward-looking data is obscene, like not good, right? Look at the financial conditions index, right? This is market implied CPI falling off, same as the pandemic, same as 08, right? I mean, this is a bad drawdown. And the Fed's at 3.6% on the 2-year. They have to cut, right? But they're waiting and waiting and waiting, as they always do under Powell. This is a regional Fed survey, expected manufacturing employment, not good, right? Pandemic here, 08 crash. I mean, hello, you have to cut rates or something if this is going to continue, right? Why are we at all-time highs? The market just sees through and just thinks they have to cut rates massively, they have to print money, and the fiscal side has to be way more dovish. And that's what Besant has told us. We're still waiting for the Fed. CapEx index, right? Pandemic, look at that. We're down there again, absolutely insane. So are you thinking a huge bazooka of stimulus like the pandemic? Maybe. Manufacturing outlook, very, very, very low. You're looking at, again, like 08, getting there, right? That's usually when you get policy responses. Fiscal side, tax cuts. Well, we know we're getting those now by the 4th of July. Now we're just waiting for the central bank. All of this data is not good. You're looking at potential GDP forecasts anywhere from -2.5 to maybe +3. We don't know. We'll have to wait till that comes out. But looking at inflation, it doesn't seem to me like GDP is going to be very, very high. Also, given that we now are actually under a tariff regime with higher taxes, which is a drag. So they're going to wait for all that data to come out, in my opinion. And then as it comes out, that gives them the cover to cut rates and stimulate if necessary. The 2-year at 3.6 is insane. They need to drop this a lot, right? We're seeing under 2% inflation if you look at the month over months, right? You just carry that forward. So this has to come way down. So that's the policy response coming. The fiscal side and the monetary side could easily change at any point. We just don't know how much pain they have to see in the data before they actually change. But for me, I don't care about that. I'm not trying to trade if the market crashes another 10% or so. I don't know. 6 months time, things are going to be way more dovish from fiscal and monetary, in my opinion. That's the trade. That's what I'm in. And I think we're going to get it over the next 6 months. And that brings us up into a new all-time high for BTC. If you're in the crypto course already, my updates will be coming over the next day or so. I'll let you guys know when I post them. If you don't have it yet, you can get 20% off via code BTC at checkout, link below. I'm James, it's MoneyZG. Cheers for watching, and I'll see you in the next one.